Hello, everyone. I'm Ben, your daily trader,
And I'm Kagan, your other daily trader.
and today we're going to be talking about price cycle inducement and how we can use it to not only validate POIs, liquidity inducement traps, but also identify reversals.
Pretty cool. Pretty cool. So I guess the main question I think a lot of people might have is what is price cycle inducement?
So, price cycle inducement is actually fairly simple. It's a very overlooked concept. It's not entirely needed. The way I would think of price cycle inducement is having added confluence to your analysis, right? This is pretty much going to help you understand, um, for example, a POI or a point in the weekly cycle that's just going to pretty much be just added confirmation or added confluence into your analysis. This isn't the end all be all holy grail of trading.
Right.
Um,
So it's just
although
kind of like adding things to your tool belt, basically.
pretty much it's just another tool to have at your disposal. Credit goes to Steve Morrow and ICT. Again, I'm not sure who's the first one to create it there because it wasn't originally a smart money concept. It was based off of manipulation and reverse psychology price action, um, which that credit goes to Forexia and Steve Morrow. So thank you to all those people that pretty much found this. We'll start from the beginning. So what is price cycle inducement? I have gone over it probably numerous times in videos from the past. However, I'm going to go into a lot more detail within this video. Price cycle inducement is simply 3 cycles of rise in price and or 3 cycles of drop in
Specifically
price.
three.
Specifically 3.
Okay.
Now, price can continue dropping, right? We can have a 4th drop, 5th drop. It's just once we have the 3rd drop, we can anticipate that a reversal is near, right? So the saying is, and I've said this saying probably a couple times already before, after 3 cycles of rise, the market needs more guys, right? So what will happen is the market will have 3 cycles of rise. It will need more guys, meaning accumulate. And then what used to happen, right? What used to happen back in the day is that we just have a nice deviation, right? A nice divergence in price, right? We'd have our TDI, entry helper, whatever you want to call it, it's all the same, right? Up as well. And then there would normally be a reversal. However, what we're seeing these days now with a bunch of SMC traders and a bunch of retail traders is that the tops of these, right, now get stop hunted and then the actual move occurs. All right, so the main pattern we're looking for here, right, is 1, 2, 3 cycles of rise, some sort of chop, right, which is going to tell us that, okay, this is where volume is kicking in. We're going to have a stop hunt again, and the market will start to drop.
So could you say that on like the third cycle when you have the consolidation and everything, um, when you have that stop hunt, it's kind of just confirmation that that's like the third rise and that's gonna
So this
reverse.
right here is actually the 3rd rise. We have 1, 2, 3 hits, right?
And that's what a
Most
stop hunt
people,
is.
right? Most people know what this methodology is within other courses, right? Like this is still somewhat retail methodology, just with a SMC lens on it, I guess you can say, or an advanced SMC lens, right? And we're just simply waiting for a stop hunt of that chop, right? And then hopefully there'll be some sort of divergence here and then some sort of confirmation that's going to allow us to hop right into these cells here.
Right.
And we don't even need to be looking for POIs in the past here because we have price cycle inducement to tell us that this reversal is imminent, right? Now, the other saying is after 3 cycles of drop, right, the market must chop. So it's the same idea in a bear market where we're going to have this consolidation here, another stop hunt out, right? And then price will reverse.
So is there a scenario where it doesn't stop hunt?
Sure. I mean, it's just like, is there a scenario where retail works? Yeah. I mean,
Right.
there
Okay.
there there are clearly, normal retail trend lines that will appear, right? And you'll have a breakout, and that breakout will actually fall through and we won't get it. Yeah, retail still works sometimes, right? And so
Mhm.
does like normal SMC, right? I mean, part of the way we trade now is algo trading, right? Understanding where SMC and retail is getting trapped. However, what makes algo trading a little bit more difficult per se is the FOMO, the psychological aspect, knowing to stay away from those normal SMC trades, right? Like those normal inducements that people see, right? Like there's more to inducement that people realize, right? Like I'm looking for more than just inducement when it comes to algo trading at this point, right? I'm looking for very specific price manipulation candles to form, very specific candlestick patterns to form, right? Um, so that's a whole other lens. What I want to say is, though, using price cycle inducement kind of clears up that lens of it, right? It's that added confluence that you're probably going to need in your trading that's going to help you identify certain manipulation that might happen in the market, right? Understanding that there's 3 cycles of rise occurring in the market and then this chop, right? We can now identify that there will be a manipulation, right, to the highs that will cause price to go the opposite direction. Now, understanding this, right, how is this used in various scenarios, right? Because we know what price cycle inducement is, but how do we apply it, right? Because do we use this on a macro time frame? Do we use this
Right.
on an intraday time frame? Like, how are we using this? There's so many different scenarios, but I'm going to try and walk you through the 2 most important ones. If you go to my second, I guess, the video that goes over the lit templates, right? The inducement trap templates, what those go over is how the New York session or the intraday sessions can have 3 drops, right? Or 3 cycles of rise. In New York, will chop, right? Stop hunt, either London lows or dead zone, right? Lows, and then reverse, right? So let's say we have Asian range, right? We have what going on here, a break and retest pattern in London, right, out of the Asian range. So we'd be hopping into shorts here, right? So we'd continue down, have that third push right here, use that stop hunt of the push, and then hopefully we'd get in some sort of retest here, and then price would fly, right? That is something that we'd be looking for, right, within the intraday. Now, how do we spot major reversals? This is called the 333 trade,
Oh, that sounds pretty cool.
right? And what does that mean? We need 3 cycles of rise on the high time frame, 3 cycles of rise on a medium time frame, and 3 cycles of rise also on the intraday time frame. So how does that look on a liquidity perspective here? We understand that the market is fractal, right? Let's say that the 4-hour has 1, 2, 3 cycles of drop, and it has already made the chop, right? And now it has made that last stop hunt down. All right, that is what's happening on the 4-hour. We want to know so this is a whole brand new day right here. We want to know what's happening within this day here, right? What's happening within this day here? Very simple, right? Let's take another lens on this. Understand that within this fractal part of the market, we're going to have another 3 cycles of drop within this area here. Once we have 3 cycles of drop on a high time frame, 3 cycles of drop on a mid time frame, right? The same thing is going to happen within this leg here. Right? It's a little bit like Inception. I've talked about liquidity inside of liquidity, right? This is kind of a similar variation of that, right? And it's really going to help you, really going to help you find some crazy reversals in the market. I want to go back into hindsight now and show a few examples of how this is used, because 3 cycles of rise or 3 cycles of drop, right, on a high time frame is going to tell you where price is going. I've been calling this rise now for so long. if you go back into my videos and we talk about the weekly analysis, I talk about the price cycle inducement involved with all of this right here. What do we have? Usually at the beginning of price cycle inducement, we have something called our peak reset. After our peak reset, we then have 1, 2, 3. Here's the chop, stop hunt of the chop, right? 1, 2, 3, chop, stop hunt the chop, right? And it looks like we get a little bit more accumulation here before running.
So
Right
does
now
that
we can
accumulation
assume
right there,
that there's going to be a huge reversal. Yeah, go
so
ahead.
the accumulation at the bottom at the stop hunt, does that not show that, you know, the the 3 price cycles was not effective? Or with the consolidation there, it gives it even more of a
This gives it more
confirmation,
this gives it more confirmation. The bigger the chop, the bigger the move.
even
Right?
on the stop hunt itself?
Right, yeah. As long as it takes a stop hunt, the chop must be above the hunt. Once we make the hunt, we must consolidate above where we hunted,
Mm.
right? Because this right here is where we're taking out orders. Where are we taking out orders from? This liquidity over here, right? So we're stop hunting all that liquidity over there in order to catalyze this huge move. And we could have known that this was coming, right? 1, 2. As soon as we have 3, we're like, oh, wait for it to chop, right? And we can play the sell side too, right? We could theoretically know that we could start selling into here, right? And then as this pops up, right, retest, we can start buying into here, right? This is how we're using price cycle inducement. It's kind of gives you just directional bias for the most part.
Okay.
So
Yeah.
understanding, yeah.
So I was just saying, so it's definitely not something that you can put like limit orders on or anything. So it's something you have to actually
No, you need to
look at
react to this,
constantly. Yeah.
right? I am a current market structure type of trader. I don't like trading things from the past. I like trading things in the current. So I'm mainly looking intraday. However, that doesn't mean I don't have a high time frame bias, right? I'm still looking at what's going on the higher time frames to understand how to trade the intraday. Now, understand that this is our daily point of view, right? Let's go into some smaller time frames, see if we can start analyzing, right, other forms of price cycle inducement, right? So here, right, we need to identify our peak reset. Pretty much how is that identified? Here's that sweep of liquidity, right? That first break of structure right here. First of all, let me get rid of session breaks. This first break right here, right? I want to see us in reality break all these lows down here to start my price cycle on the 4-hour. So here's 1 cycle of drop, retracement. 2 cycles of drop, retracement. This is not meaningful to me. Or 3 cycles of drop right down here. Now you're probably wondering, where is my stop hunt of the 3rd drop? Well, like I said before, just how retail trend lines work, just how, you know, normal SMC works, right? Well, this is still 1, 2, 3 cycles of drop. And you know what happens is 1, 2, 3. If we make a W, cross that W, a lot of the times we're going to come back, retest that W, and fire away. And that's exactly what happens here. 1, 2, 3. Here's that W, right? We come back up, we retest that W, as you can see right here. And then price does what? Starts to reverse again, right? And we understand, because this is one vector, right? The daily is stop hunting, right? And then we go into this vector on the 4-hour. This is confirming price cycle inducement as well, right? Now, if that, yeah, go ahead.
So we're looking for entries on the retest, not when it actually stop hunts itself. It's on the when it comes
Depends.
back
It depends
right
on the
there.
setup.
Yeah.
It depends on the setup. We can either get in on the stop hunt, right? And or we can wait for that W formation, right? Sometimes we can wait for a divergence at the end of the stop hunt. There's multiple entries to this. What I would say is back test it, right? Because what I will show you now might be different another time. Just understand the premise of this, right? Like really understand what's going on, the overall picture, right? The overall picture, right? The overall picture is that we just need to be able to correctly identify 3 cycles of rise or drop. Now, I'm sure some of you may have your question, well, what determines like a lower low or lower high? Well, first of all, I explained this in some other videos. but this is a tiny piece of what I call turbulence, right? And you got to think about it like you're on an airplane, right? You're not going to remember the small pieces of turbulence on an airplane, right? But you'll remember the giant pieces of turbulence. No one's gonna remember these tiny things happen. Sorry about that. My dog was barking. Anyways, back to it. So we just have to understand the overall picture here, right? How to really properly identify 3 cycles of drop and or 3 cycles of rise correctly. And like I said, really understanding the turbulence, right? Small turbulence versus big turbulence is really going to help you find those true highs and lows and or those true inducements in the market.
So there has to be a significant drop and then retracement.
Right. We need to see significant
turbulence.
drop, significant retracement, significant drop, significant impulse, right? Retracement. Impulse needs to be fluid.
A lot of the times, at least, I could say from our perspective, when I'm looking at the charts, I see the price cycles, the 1, 2, 3, but sometimes I have equal distant highs on the second and the third. Does that indicate, anything?
Equal distant highs. So if you're saying that we get something like this, right?
Yeah. Yes.
Well, I mean, in the moment of time, right, we can theoretically trade both ways. We can trade the shorts within the cycle, right? Just general market structure. We can take this extreme, write it down. Then we would know to hop in back to longs, right? Once we get confirmation of the price cycle, right? So we can hop into these shorts here that now kind of create relative equal distant highs, which are an inducement area, right? So 1, 2, 3 cycles of drop after getting in these shorts, right? We can now ride back up and hedge, right? Gotcha. Short here, hedge here. But yeah, I want to show you one more thing just to show you how we can go on the smaller time frames here, right? And identify, one more cycle of drop in the market, right? So let's come here. Let's go on the hourly. And let's see. And I haven't even tested this out yet. I have no idea if this is going to happen. I just assume, right? You can probably already see it. Break a structure. Here's our first drop. 1, 2, 3. So hopefully now you can see that this is working across all time frames, right? Daily to the 4-hour, into the hourly. And let's see if we can even go intraday here.
Yeah, I was about to say, is it useful on like the 1 minute, you would say?
Let's take a look. So here's our final intraday drop, right? Let's take a look and see how we would have traded this, right? Here again, 1, I can mark this out. 1, 2, 3 cycles of intraday drop, right? Bunch of chop, right? Here's that kind of retest. And then their price goes, and that's how you catch the absolute bottom after pretty much having such a high time frame analysis, right? So yeah, as you can see, we can track price weeks back, months back, all the way into the intraday, and they're going to catch you these massive reversals. No little tiny reversals. We're talking massive reversals all the way from something like here, right? Easy 1 to 100s.
It's like a big 4-hour ping pong.
Pretty much. So this is how you ping pong price on the daily, pretty much. All right. Well, hopefully you guys learned something new today. If you did, please make sure to hit that subscribe button, hit the like button, and definitely follow us on Instagram too to reach out with us there. On our Instagram, we also have a link to our Discord, so feel free to check out our community there. And if you have any questions, leave a comment, DM us on Instagram at seisners.trading.journal. We'll get to you.
All right.
Peace.